Welcome to Crypto Game, where people like you come to hear the truth about the current financial economy and how to benefit from it. In today's topic, we have billionaire businessman and investor Mark Cuban exposing the crypto world and how you can benefit from it in these tough times. Stay tuned because later in this video, we give you 2 cryptocurrencies that show current constant growth that you may want to invest in while they're still cheap. In a recent interview, Mark Cuban discusses his thoughts on opportunities in crypto and what you should look out for while investing. Mark contributes a lot of his crypto success to being innovative and forward-thinking when it comes to the future of business. Crypto coins and tokens stand out to Mark because he sees it as a future way of doing business. Analysts estimate that the global cryptocurrency market will be more than triple by 2030, hitting a valuation of nearly $5 billion. Investors, businesses, and brands can't ignore this rise of tide in crypto. A fun fact is 50% of crypto investors would be comfortable using crypto as an option to pay for online shopping. Because of these statistics, Mark Cuban sees a lot of opportunity coming from crypto in the near future. But at this current moment, Mark feels crypto is getting a little bit more stagnant because a lot of investors have backed out at this point in time during the recession. Once crypto rebounds, Mark feels it will have the same effect as Facebook, iPhone, and Amazon did when it was first introduced to the internet.
It really is going to take that next big thing to really drive utilization. That's my concern. I've said this before, we saw the same thing with the internet. Streaming, bam, it's fun. New websites, bam, it's fun. Amazon, you're buying, bam, it's fun. And then, everything kind of cratered in 2000 and 2001, and there were no BAMs for a long time. There wasn't shit happening for a few years. And then, in 2004, you saw Facebook and social networks hit, and then you saw app stores hit, when in 2007, when the iPhone came out. So we're looking for that app store iPhone, platforming moment where there's new applications that bring in a lot of non-traditional crypto users. Because the thing that's going to drive crypto above and beyond just the cryptoites is something where you just have to use it.
Mark discusses his next big opportunity in the crypto space, which is inflation versus utilization. We all know that with inflation, the US government has printed more money than consumers actually need. Bitcoin, on the other hand, has increased in value much faster than the US dollar has lost value, going from virtually worthless in 2010 to more than 20,000 in 2020. The reason inflation is important for crypto is it leads individuals to invest more money in digital money. Because the US dollar or euros they've placed in savings accounts are actually losing value over time versus a crypto's upward trend. Utilization, on the other hand, is great for the simple fact that the more a token is needed for transactions in the financial system, the more its value per coin goes up.
Inflation versus utilization. Because as utilization goes up and the value of a token goes up, then the cost to do something goes up. And so you have these two competing interests. Hey, I want to create an app that generates 1 million NFTs a day, right? Just picking something out of left field, right? I'm not saying there is one. Well, if the value of Ethereum keeps on going up because there's a deflationary spiral going on because of 1559, now all of a sudden, where's the equilibrium? And then there's the question of all the stakers with staking ETH, right? Now it's staged on when they can get out, but will they? And how quickly? And what happens to the staked ETH, along that period of time, and what does that do for the pricing? So there's a lot of uncertainty, and you're seeing a lot of people speculating by buying call options, right? The option rate versus Bitcoin is through the roof.
Next, Cuban touches on the topic of Cardano and how he doesn't think they've had much of an impact at all. Cardano is a decentralized blockchain designed to be a more effective alternative to proof-of-work networks. While the entire market has had a bad run following the bull rallies of last year, Cardano seems to have taken the hit harder than any other digital asset. The price of Cardano is down by more than 60% from its all-time high. This means that 82% of its investors are losing money at its current prices. Let's hear what Mark Cuban has to say about it.
You know, my thoughts on Cardano are the exact same as they are on Polygon and Ethereum. You know, business walks and it's just, there's got to be a there, right? And you can go to Coinmetrics, you can go to all these different places and look for transactions. And I guess the people in Africa are not using it as much as they expected to, because you don't see the transactions, you don't see the fees, you know, and the crypto, you know, I use cryptofees.info a lot, right? Just to get a sense of what's going on. It's just quick and easy. But I look at number of transactions, and to me, that's the bellwether of success. And you know, now they can be distorted, and you've got to smooth it out because somebody comes in for a play to earn game. Let's talk about play to earn too at some point, because that's important right now.
This brings us to our next bonus tip and what we recommend you should consider as an inexpensive cryptocurrency buy. One crypto token that shows a solid upward trend at this moment is Anchor. Anchor makes staking, liquid staking, and other yield earning opportunities easy and accessible to any crypto investor. Anchor provides comprehensive blockchain developer solutions, including traditional APIs and a decentralized multi-chain network of public RPC nodes used to access blockchain data and execute codes. Currently, this crypto token is up by 37.88%, given the fact that we're in the middle of a recession. Currently, you can purchase this token at 5 cents per token. Stay tuned for the next coin before the end of this video. Next, Mark Cuban discusses his thoughts on Axie and Plan to Earn. What Mark likes about Axie is they were first to use a sponsor-based model to blow up. In other words, Axie subsidized their costs so that it was a no-brainer for people to use it. For those of you that don't know, Axie is an online video game where players can collect and mint NFTs. And what's great about this is players can save their best plays and sell it as an NFT. Let's hear what Mark has to say about it.
So play to earn typically is subsidized, right? So with Axie, they were smart, they were first, and they had a huge sponsor base where they went out there and got groups to sponsor people left and right. And it just blew up, right? And why wouldn't it blow up? It's free money. It's going back to the old Silicon Valley way for software. We'll subsidize the cost for you. We'll subsidize the cost of bandwidth or storage, whatever it is, to get you to use it and view it as a marketing cost. But it's still a traditional ecosystem where either you subsidize it or you generate revenues to buy the tokens that are being created. And if you don't generate revenues to buy the tokens, either you have to have new subsidies continually coming in, or you have to have new players coming in to subsidize the existing players. And the minute the musical chairs stop, it collapses.
Mark then gives his take on the SEC versus Ripple and how he intentionally avoids it. If you haven't been keeping up on this, it's an ongoing lawsuit alleging that Ripple and its current and former chief executives have been conducting a $1.3 billion unregistered securities offering by selling XRP, which Ripple's founders created in 2012. The reason investors find a problem with this is due to the fact that these are unregistered securities that deprive potential purchasers of adequate disclosures about XRP and Ripple's business and other important long-standing protections that are fundamental to the public market system. This is why Mark intentionally avoids it.
I haven't paid a whole lot of attention. I've intentionally avoided it because all the Rippleites or whatever they call themselves just go nuts. So the minute I say something, then it just turns into my timeline gets destroyed on Twitter. So, but I can talk generally about the SEC all day long.
Yeah, because it's kind of like, even if Ripple wins, it's like Ripple's not in the conversation.
No, and it's already too late, right? Because they've gone back and forth, and it's a different battle than the general issue of how the SEC deals with crypto.
But yeah, still, if Ripple wins, I mean, generally that could be seen as definitely positive for crypto versus a loss. But just the SEC in general, yeah, talk about that. They seem to really verbally be wanting. Yeah, go ahead.
SEC is incredibly hypocritical. You know, they talk about trying to protect investors. Do you guys know what the pink sheets are?
Like a car?
No, not for a car. Pink sheets are little public equities stocks that don't trade on the big exchanges like the NASDAQ or the New York.
Like the penny stocks.
Penny stocks, but penny stocks can be different types. There's over-the-counter penny stocks and there's pink sheet penny stocks, and they're not necessarily all penny stocks. They can be big companies. Like what was the coffee company out of China that turned into a scam? Luckin Coffee or whatever. But anyways, they trade over there too. Well, I just looked at this yesterday or 2 days ago because someone asked me. There are 16,750 pink sheet stocks. Probably about the number of tokens there are, probably, right? There is no protection for anybody anywhere coming from the SEC, and that already falls under their purview.
This brings us to our next bonus tip. Our second fastest growing crypto coin at this moment is Ethereum Classic. Currently, this crypto coin is up by 9.03%. Ethereum Classic is a hard fork of Ethereum that launched in July 2016. And since its launch, Ethereum Classic has sought to differentiate itself from Ethereum. Ethereum Classic first set out to preserve the integrity of the existence of Ethereum blockchain after a major hacking event that led to the theft of 3.6 million Ethereum. Right now, this coin is priced at $41.99 per coin. It was up at an all-time high of $74.90 just 1 year ago, and is starting to trend back upward. Mark now exposes the crypto industry by giving us information he knows that maybe the average person doesn't know.
Okay.
Expose the cryptocurrency market. What don't average people know that you know as a multi-decade investor?
Well, I'll do this. Like if I was explaining it to Bill Gates, right, who dismisses it and is a tech guy, I think the token side is all noise. The price of tokens are noise. That has nothing to do with the foundational value of crypto. Put aside Bitcoin. Bitcoin's store value, right? You can argue about Lightning and all this stuff that Maxis argue, but it's not really an extensible platform. It's not extensible enough to build applications on yet. Which is a whole nother question. If you can, if you're willing to change it, that creates all kinds of other questions about Bitcoin and what the Maxis think. But I think what really comes to play for me is the idea of distributed applications driven by smart contracts.
In today's interview, Mark exposed the crypto market and gave his take on what's worked best for him. Subscribe to stay ahead of the current economy, as well as making better financial and economical decisions for you and your future. We'll see you on the next episode.